Hey guys, welcome back to the channel. Let's wait for some new members to join. Today we are going to talk about the US inflation data and why this is very important this time. We are approximately in the same situation as we were on the previous month. That is why we have to be careful. Sorry for my cough. This month the inflation rate was reported 3.9%, and this time it is expected to slow down to 3.7%. During the previous month it was 3.7 on November, and later we saw this to increase by 0.2%. So as you can see, also the monthly data it is not expected to change during this moment. It is very important to focus on this data because the market will interpret the fact that how the Fed will change the interest rates. So everything, or we have seen during the previous month that the market only speculated about a possible rate cut from the Fed when they are going to begin the cutting cycle of the interest rates, and this is all the mess that we are already suffering. We have seen that the US economy is already very strong. They reported an increase on the USD on the CPI data. They also reported very high employment data, so it is not the reason for the FOMC to cut the interest rates anytime soon. However, it is obvious that the market will speculate again. The focus will be again on these numbers. It is also criticized by many operators that they are still holding for a long period of time this type of interest rates. I don't think that the Fed is going to cut the interest rates on the next meeting on March. They will take time, as they also repeated before. They said that we are data dependent, so they will not take decisions based on only 1 month. This is very important for the moment. So let's see what is going to happen. However, we have to be very careful because the market didn't move at all in many currency pairs for about 1 month, and that is very, very weird considering all of this. Just 1 moment, please. So this is a problem that we are already facing for these days. Okay, sorry for the interruption. This is the problem that we are facing right now, and in my opinion we have to be careful and probably to stay away from trading today. It will be a very volatile, very market impact. The speculation should be higher than normal considering that everyone is expecting and is focused on this data. However, overall, I don't think that the Fed is going to change the interest rates. The inflation number will slow down. However, the possible scenarios that we may see, sorry about that, if the CPI data will be at 3.9 or above 3.9, it is likely that we may see a stronger US dollar. If the CPI data will come in 3.7 or lower than 3.7, we must be very careful because we may see the USD getting weaker. And the problem is that we can never know in advance how weaker it is because the US economy is still strong. We can face any speculative move. However, let's move on the charts that I have already prepared for today with the USD pairs. Thank you so much for now. I really appreciate it. So let's move on the first one, that is Euro Shift, Euro USD, sorry. I have posted analysis and I am still from the top. This was step-by-step analysis. We can see that from the top, and when we had this type of potential head and shoulder pattern, the price moved down very well. So all of this movement was about 260 pips. However, in the current conditions, as you can see, Euro USD is still taking a pause. We have also this broad image pattern that is pushing down. And for the moment, both possibilities are possible. So, considering that it is that the inflation rate may come in lower than expected or as expected, 3.7%, I think it may create bullish movement up to the pattern completion. So we may see the price to create this move, and later it can create any speculative movement on the bearish side. So it can create any type of trap for all the bulls that want to push Euro USD even higher. However, this is one of the possible scenarios. Another possible scenario that I would like to look at for Euro USD, because this is not clear at all. As you can see, the bullish volume is already rising again here. It keeps rising. It was slow, very slow since yesterday, so the chances are that it may continue to reach the top of the path. However, we have to be careful. It is not a good idea to join this trade before before the CPI data. We had CPI data also today from Switzerland, and as we saw, the Swiss franc lost a lot of volume. I explained this on today's analysis, and the chances are that it may continue to rise further, also for Euro chief. However, this is the current situation. Even if the price will break out from the current pattern that we have, I think that we must be very time. It can hit a possible fast breakout. The scenarios are endless this time. That is why I think that we should be more careful than the times. Previously, we had this pattern that was taking shape, and we had one false breakout. So this is rising the chances that we may see this type of developments. And on the other hand, we had many false breakouts during the previous 2 weeks, and it was also getting very, very difficult and risky trading in those conditions. That is why it is better to wait after the CPI data to see what the market is doing, any possible reaction, because it will not die immediately. So just forget about the bullish scenario in this way. And it is better to wait for the price to take a clear shape. So this is what I'm looking at for the moment. Let's see if the price will come close to the resistance line of this pattern, and later we can see how it will take shape. If you think that the price will continue moving down further, and it can be possible considering the volume that the price is accumulating, the chances are that it will face a very strong resistance close to 1.0670, this structure here where we are at this point. And the next one will be the daily structure where the price stopped before. So this is a very strong structure close to 1.05. If the price will come down to this area, despite the fact how it can develop, the chances are that we will see this bigger bullish movement, and it will complete a bigger picture that we are looking at for this moment. So the price may rise up to the top of the pattern. Very complex scenario overall. Usually, when we have this type of scenarios, I think that we should not trade. So it is better if you stay away. Thank you for watching. Please don't forget to hit the like button and follow. I will really appreciate it. So this is the first one that we are looking at for a possible trading scenario. The next one that I have shared also these days, but this is creating a complete transformation at this point. It was in this way since a long time. The price was taking a pause in this area since February 7th, so for about 1 week in this zone. It was not creating a clear direction. As you can see, the structure is not holding at all, and this is showing for a possible bullish move. So this is the opposite scenario that Euro USD is showing. However, the chances are very high that with this speculation, the price may test the top and later we may see GBPUSD moving again. I don't see any strong reason for GBPUSD breaking the top above 1.2830. However, we must be careful. This small pattern is showing that the price is rising, and that is why we should be careful because the USD pairs are showing different things in different charts. So very, very critical moment now. This is what the price is already showing here. The bullish breakout, I think that it will happen only when the Fed will decide. The bullish movement will begin only when the Fed will decide about a possible rate cut. It's too early to anticipate right now. So that is why I'm excluding this trading scenario, and this is a possible scenario that we may face. The first movement can be because of the speculation. The next movement can be the sale of the news. So this is what this is showing here. We have also a minor resistance close to 1.2770, and it is risky to jump in the trade at this moment. The problem is that if you are going to jump in the trade, it can happen also that the market can release liquidity quickly and you in long position. However, this is bullish and this is rising for the moment. From a technical perspective, this is only bullish, but it can happen the sell-off that I already explained. We have one question about USD and GBP yen. I would say that it is too early to trade USD yen and British pound yen. It is not ready yet. They are testing all-time highs. However, I will prepare another live streaming related with this topic because it is not a small topic. However, I think that you should stay away from the MPX. The next one, related with gold. Yes, I have gold on the watch list. Thank you so much for asking. The next one that we have is New Zealand USD. Just one moment, please. One of the guys is complaining about the audio quality, but I think that it is fine. No, everything looks fine on my side related to the audio. So the next one that we are going to look at is New Zealand USD. I shared the structure analysis some days ago. The price increased from this area up to a small minor zone, and probably it will rise further with the beginning of the US session. However, we have to be very careful because the current pattern is not clear for the moment. What is very strange that was making everything very difficult for trading on New Zealand USD, because most of the time we think that it's our problem, but it's not our problem. Everything is related to the market. So if we are going to look at this pattern, look at this zone here. This is dating back on January 16th. So the price was moving in this area for about 1 month. So it's a very long time. If you are, say, a trader, if you are a day trader, this type of corrections, most of the time they cannot be anticipated. The price will continue moving up and down in this area. These are very boring, are very risky. sometimes we have to take any bad decision because the market is our problem with the entry order, but the problem is that the market was not moving at all. So look at here. This was the point I was looking at. This is January 15th, and the price is still moving in the same zone. So probably after today CPI data, we are going to have any clear direction. A move above the pattern has higher chances to begin a bullish movement, and a move below the pattern can begin a bearish movement. The next question related with New Zealand is the fact that how down it can move if the price will break through this zone through 0.6050. This is another question that I have with this scenario. In my opinion, it is getting very difficult. It looks like this is going to create a bullish pattern. During all these times, the price was creating this type of 1, 2, 3, 4, 5 pattern that we had here. And later, if we are going to break this down on a lower time frame, this was taking the shape of a clear textbook example. So look at the correction as an ABC, and we hit the previous movement from above. So let's see what is going to happen. I'm not confident at all in trading New Zealand USD, considering that we have one textbook example that is showing for a bullish movement, and on the other hand, it can be a correction that can extend the price down up to the bottom before it moves back up. So very complex, and any breakout from this blue area will create the next bullish variation in order to keep it simple. Regarding dollar index, I have shared this analysis also before. The price created the first move. This is where I posted this analysis, and we can see that it keeps rising from this point. The first correction was bullish. We are having another bullish pattern. However, we have to be very careful because the CPI data probably may transform the picture of the dollar index, and if that is going to happen, we may see the price to break through the red zone, and the next zone will be 102.95. So it's not that easy as it looks like. It can extend the fifth wave, just a minute. It can extend the fifth wave, but it can also move down and it can create the ABC correction the same way as New Zealand USD, for example, was showing. So let's see. The next move will happen only after the CPI data, very important day today. And the next one that we are going to look at is gold. So we have seen that in the bigger picture, I have explained many reasons why gold should move down. And as you can see, despite the fact that the US strike in Iraq and Syria, we can see that it didn't create any big bullish move. The price moved down again. Yesterday, it was very strange because we saw these big sell-offs happening during the day. And today, the price is showing strength. So this is related with the fact that the expectations that we have for the CPI data are that we may have a slowdown in inflation rate. This is a strong reason why gold is rising in advance. Probably it will take a pause in some areas before the next movement, so it can come close to 100, 200, 2040, sorry. Can increase in normal speculation up to the next structure zones and look at how strong was this area before. We may see testing this area, and if the speculation will get even higher, we may see gold at 2084. However, everything is related to the speculation at this moment. I would like to be a bit conservative. 2080 probably is too much, but we may see bullish moves before the market decision, and later we can see any different move. So everything is related to the CPI data. For this moment, we can see that we have bullish volume and the bulls have the price control for the moment. And also, if we are going to look at on GBPUSD, this is rising more, and also Euro USD is showing some strength against the against the dollar. So this is why we can see some weakness on the US dollar before the price will take another direction. So let's see what is going to happen. Where Patel is asking about Nasdaq 100. I would say that it is better if you stay away from indexes, not only from Nasdaq, but from all indexes, considering that they are not clear at this moment. The problem will be that it will be speculated a lot about the numbers. So this is what I think that you should be careful at this moment. So just stay away and let's see how the price will develop. I will keep you updated. For the moment, all indexes are still on the bullish zone. They are still rising. So there is nothing to trade there. The problem is that if you are going to join the bullish run on the Nasdaq, at this moment you can be stuck in a bullish trade. So just let's stay away. Uh, Florian is writing. I would say that it is better, Florian, if you stay away from GBPN. It is not good. The problem is that we have also the UK CPI data during the coming days, and it will be very, very risky. So I really appreciate all your comments. USD Chief, related to all the USD pairs, I think that you should stay away. The market has to create a clear picture before the next move. So don't trade at this moment. But I saw that USD Chief is rising and probably it may rise further. So let's stay away because it is not a normal situation on the USD pairs. I think is very critical moment. We have to see the market to create the impulsive moves before we continue trading. So this is my personal opinion at this moment. So that's all for today. I'll keep a note about all the questions that you guys are writing, and I will try to do another live stream very soon. Thank you so much for joining. Please don't forget to hit the like button. Bye bye.